$400 billion.
Hmm.
I just want you to sit with that number for a second.
Yeah.
400 billion?
It's a huge number.
That's the annual revenue figure Alphabet just crossed.
Yeah.
For the first time. I mean, to put that in perspective, that's like the GDP of Denmark.
To Philippines, yeah. It's a monumental figure. But if you're just looking at that top line number, you're missing the real story here.
Oh, absolutely.
Because the company that reported these earnings yesterday on February 4th is, well, it's a totally different company than it was even 3 years ago.
And that is exactly what we are here to unpack. This is not about a search engine selling ads anymore. We're looking at this fundamental pivot. They're going from, organizing information to building agents. AI that actually does stuff for you.
Precisely. The agentic era. That's what they're calling it. And while the revenue is, record-breaking, the cost to build this new future is, well, it's terrifying.
Oh, we are definitely getting to the bill. They are planning to spend an amount of money on servers that, honestly, it just sounds like a typo.
It really does.
But before we get to the scary numbers, we have to look at how they're making this money. Because the biggest news wasn't actually ad revenue. It was a partnership that I think it surprised a lot of people.
You're talking about the Apple deal.
I am talking about the Apple deal. But let's set the stage. Q4 2025 earnings dropped yesterday. Revenue, $113.8 billion for the quarter, up 18%.
And earnings per share beat expectations. But the thing that really jumped off the page was Google Cloud.
It really did.
I mean, Google Cloud revenue grew 48% to $17.7 billion. Now, you have to remember, for years, Google Cloud was the distant third horse in the race. It was AWS, then Microsoft Azure, and then Google, just trying to catch up.
They were the underdog.
For sure. They are not the underdog anymore. That 48% growth is actually accelerating. And it's all being driven by what they're calling enterprise AI.
Right.
Big companies are realizing they just can't build their own AI infrastructure, so they have to rent it from Google.
Okay, but big companies is vague. Let's get specific. Sundar Pichai, the CEO, he finally confirmed a rumor that's been floating around for months. Google is now the preferred cloud provider for Apple.
This is huge.
But wait, let's pause on this. I mean, Apple and Google are rivals. Functionally, they hate each other.
Right.
They fight over phones, over browsers. Why on earth would Apple, the company of privacy and walled gardens, hand the keys to its AI infrastructure over to Google?
It's a classic frenemy situation. But it tells you everything you need to know about the state of technology right now. Apple is incredible at consumer hardware, on-device software.
The best.
But building these massive power-hungry data centers you need for foundation models, the brains behind the AI, that is a completely different beast.
So Apple basically they capitulated. They looked at the cost and said, you know what, Google, you handle the plumbing for us.
In a way, yes. It completely validates Google's big infrastructure bet. Sundar confirmed it. Google Cloud is helping develop the next generation of Apple's foundation models using Gemini technology.
So when I'm using an Apple device in, say, late 2026, the intelligence might have an Apple logo on it, but the heavy lifting in the background, that's all Google's iron.
That's Google's iron.
Wow. That's like finding out the engine in your Ferrari was built by Ford.
Or that Pepsi's bottling Coke. It just changes the whole power dynamic.
Yeah.
Google isn't just a consumer competitor to Apple anymore. They're a critical utility provider for Apple's entire future.
Right.
And if Apple trusts Google's TPUs and their security, well, every other skeptical CEO out there is going to take a second look.
And that explains the backlog number then. I saw that their backlog, which is just of future contracts, right? It jumped to $240 billion.
$240 billion. That's $250 billion of guaranteed future revenue. The market is screaming, we believe Google has the best AI infrastructure.
Okay, so cloud is booming because everyone, even their enemies, needs their chips. But let's pivot to the thing we all use, search. Because for the last 2 years, the narrative has been AI is going to kill Google search.
Right, the Google killer theory. The idea was, if ChatGPT can just give you the answer, why would you ever scroll through 10 blue links and look at ads? It was supposed to just gut their business model.
But looking at these numbers, it didn't.
Not at all. In fact, Sundar called it an expansionary moment. In the US, daily queries in AI mode have doubled. But here's the metric that really matters. The queries themselves are 3 times longer.
3 times longer. What does that actually look like?
So think about how you used to search. You'd type bust running shoes.
Right.
Keyword, keyword. Now people are typing, I need running shoes for flat feet, under $150, available near me, and I want them in blue. It's a conversation.
I do that.
Yeah.
Yeah, I treat it like a person. But here's my skepticism. If I'm just getting the answer from the AI and I'm not clicking on websites, how does Google make money?
Right.
They can't show me 10 ads for shoe stores if the AI just tells me which shoe to buy.
That is the multi-billion-dollar question, and Google just answered it this quarter with something they're calling the Universal Commerce Protocol.
Which, by the way, sounds incredibly boring. It sounds like a bureaucratic form.
The name is terrible, I agree, but the implication is radical. This is the big shift from search to what they call agentic commerce.
Okay, break that down for me. Agentic commerce.
So previously, Google's business model was CPC, cost per click. They show you an ad, you click, they get paid. It doesn't matter if you actually buy the shoes or not.
Right.
The Universal Commerce Protocol allows the AI agent to not just find the shoes, but to actually execute the transaction for you. It checks inventory, it uses your stored payment info, and it buys the shoes.
And the AI is the shopper.
Exactly. And the business model shifts from cost per click to something much closer to a commission. If Google's agent closes the sale for Nike, that is infinitely more valuable than just a random click.
Wait, so they're trying to become the entire funnel. Instead of just being the billboard on the highway, they want to be the car that drives you to the store and the cashier that rings you up.
That is the goal. And they launched direct offers, where you can check out right inside AI mode. It solves the ads problem by just integrating the transaction directly into the answer.
That is lucrative and a little dystopian.
It is.
It means my search engine is now my personal shopper, and it has a financial incentive to make me buy stuff.
It does, but it also removes friction. And in the history of the internet, whoever removes the most friction usually wins.
True. Convenience always wins. Okay, speaking of agents doing things, we have to talk about the internal numbers. Because while they're building agents for us to shop with, they're also building agents to run their own company. And there was one stat that dropped yesterday that I still can't quite wrap my head around.
The coding step.
Sundar Pichai said, on the record, that 50% of Google's code is now written by AI agents.
It is staggering.
Half. Half of the code for the most sophisticated tech company on Earth is written by software. Now, he did clarify that engineers review it, but still.
It's the ultimate efficiency loop. They also said they lowered the cost of serving Gemini queries by 78% in just 1 year. You don't get that by, just negotiating better electricity rates. You get that by having AI rewrite your own code to be leaner and faster.
So the AI is writing the code to make the AI cheaper, which lets them run more AI to write more code.
It's a flywheel. And this really touches on that broader anxiety people have about replacement. But Google, of course, is framing it as augmentation. Oh, this frees up our engineers to solve harder problems.
Yeah, that's the PR spin, frees up engineers. But we'll get to the darker side of that in a minute. I want to touch on the sci-fi stuff they announced, because it wasn't just spreadsheets and ad protocols. They announced Project Genie.
Yes. This is their general purpose world model.
Okay, explain this to me like I'm 5. Because to me, it just sounded like a video game maker.
It's more than that. Think of it like a holodeck for your screen. You don't just ask the AI to write a story. You ask it to generate an interactive world. You could say, I want to play a detective game set in 1920s Shanghai in the style of a noir film.
Okay.
And Genie builds the environment, the characters, the logic, and lets you play it in real time.
And this isn't pre-rendered. It's generating it on the fly.
Correct. It's early days, for sure. But the implication for entertainment, for YouTube, for gaming, it's just massive. It turns every user into a game studio.
That's wild. And then there's Waymo. For a decade, Waymo was this cute little science experiment. Oh, look, a car with a spinning bucket on top.
But looking at this Q4 report, it feels like the science experiment is over.
It's definitely over. Waymo is a real business now. They just raised a $16 billion investment round, mostly from Alphabet itself. But look at the usage. 20 million autonomous trips total. 400,000 paid rides per week.
400,000 a week. That's nearly 21 million rides a year, if that run rate holds. That is a major transportation utility. And they are expanding. They just launched in Miami 2 weeks ago, and they announced expansion to the UK and Japan. This is global now.
I did see a weird financial note, though. A $2.1 billion charge related to Waymo. What was that?
Yeah, don't let that scare you. That was just an accounting adjustment based on the new valuation from the investment round.
Yeah.
It hits their operating margins on paper, but it doesn't mean they lost cash. It's just math.
Got it.
The reality is the cars work, people trust them, and the unit economics are finally starting to make sense.
Okay. So let's just recap so far. Cloud is booming,
Yeah.
and Apple is on board. Search is morphing into a personal shopper that buys things for you.
Sure.
AI is writing half their code. And the cars are driving themselves. It sounds like the perfect quarter.
It does. There is always a but.
There's a massive $185 billion but.
The CapEx.
I actually gasped when I saw this guidance. Alphabet plans to spend between $175 and $185 billion on capital expenditures in 2026.
It is an eye-watering number.
Eye-watering is being polite. I mean, isn't that reckless? $185 billion. That's nearly half their total revenue. They're just dumping it into, what, servers?
Mostly servers and the buildings to put them in. About 60% is for technical infrastructure, the chips. The other 40% is data centers and energy.
But my skepticism is this a bubble? Are they building all this capacity for a demand that isn't actually there? It feels like the fiber optic bubble back in the 2000s where everyone overbuilt and then the market crashed.
That is the risk. That is absolutely the risk. But Sundar's argument, and the market's argument right now, is that the risk of underinvesting is fatal. If they don't build this capacity, they physically cannot service that Apple contract. They can't service the enterprise backlog.
So they're supply constrained.
Yes, Sundar admitted it. He said they literally cannot build data centers fast enough. They're buying NVIDIA's new Vera Rubin GPUs as fast as they can be made, and they're deploying their own 7th-gen Ironwood TPUs.
Ironwood. That's their custom chip.
Right, and that is a key advantage for them. Google isn't purely reliant on NVIDIA. They've been designing their own AI chips for over a decade now. That gives them a cost advantage that, say, Microsoft or OpenAI might not have.
Still, though, $185 billion. If this agentic AI future takes longer to arrive than they think, that's a lot of depreciating assets just sitting in a warehouse.
It is the biggest poker bet in business history, period.
There was one other concern that came up on the call, and I think it's important. The whole SaaS death narrative.
The DeepSeek question, yeah.
Right. The fear is that if AI makes writing code effectively free, like we just saw with Google's own code, then why would anyone pay for expensive software? Why pay Salesforce or HubSpot when I can just tell an AI, build me CRM, and it does it for me?
This is the deflationary argument, that AI will just destroy the pricing power of all software companies.
So did Sundar have a good answer for this? Because if SaaS dies, Google Cloud loses a lot of customers.
His answer was diplomatic. He argued that Gemini is the engine that will make these SaaS products better. He dropped a stat that 95% of the top 20 SaaS companies use Gemini. His pitch is basically, we aren't replacing you, we are the layer that makes you indispensable.
Do you buy that?
Short term, yes. Long term, I am not so sure. If an AI agent can do the work, the interface itself matters less. If I can just say, book me a flight, I don't really care if it uses Expedia or a custom script. The app layer could get squeezed out.
And that brings us right back to the start. The transformation of Google.
It really is a new company.
We are seeing this shift from a company that organizes information to a company that acts on it. They're partnering with rivals like Apple to own the infrastructure layer. They're changing their business model from clicks to transactions.
And they're betting the GDP of a small country that this is the future.
And they're letting the AI build the AI. That is the part that just sticks with me. And I want to leave our listener with a provocative thought on that.
Let's hear it.
If Google, the company with the best engineers in the world, is already having 50% of its code written by AI agents, and they're spending $185 billion to make those agents smarter and faster, what does the job market look like in 2030?
It is the question of the decade.
Are we building tools that help us be better at our jobs, or are we building the entities that will take the jobs? Because looking at this earnings report, it feels like the line between tool and worker is getting very, very blurry.
I think for Google, the answer is yes, and we plan to own the worker.
On that slightly existential note, we're going to wrap it up. We'll be back soon to break down the rest of Big Tech's earnings, assuming the AI hasn't taken over our podcast script writing duties by then.
Fingers crossed.
Thanks for listening to The Deep Dive. Catch you next time.